Well, good afternoon, everybody, and welcome to another amazing training session by the North Central Texas SBDC. We're happy everybody could attend. If you're not attending now, but maybe rewatching it later, remember that we will try to get your questions answered as we go. So, that said, I wonder how many of you know how to use government debt strategically. Today, we're going to be discussing that with Miss Rebecca Schultz. We're really happy to have her with us today. My name is Brett Augustine. I'm a business advisor for the Small Business Development Center of North Central Texas. We are grant funded, which allows us to offer services at no cost. And in preparing today for our conversation on using government debt strategically, Miss Rebecca Schultz, for those of you who don't know her, she's been helping business owners get access to money and financial education for over 25 years. She's also the founder and executive loan consultant for Center Lock Funding. Ladies and gentlemen, please welcome Miss Rebecca Schultz.
Thank you, Brett. Thank you for the intro. And I'm happy to be here today. This is a really exciting conversation. It's because I feel that there's so much to what's happening in the current economy, especially for business owners that are trying to recover from the pandemic, and then really seeing what needs to take place when you've received funding, how you can use that. There's a lot of gray area in this conversation. And so this presentation is really designed to be very strategic in support. All right, and we will have wonderful fodder for questions towards the end of the presentation. So I encourage you, if you have a question, go ahead and use your chat box. Don't lose the moment, right? Don't forget. And then towards the end of the presentation, we'll try to do some one-on-one time. All right, with that, let me get the presentation open. And Brett, let me know once I hit this button if I need to switch displays. We're good? Okay, we're good. All right, excellent. So welcome to Using Government Debt Strategically. My name is Rebecca Schultz. I do have 25 years of lending experience. Isn't that crazy? I know, right? It has been really my
Switch displays.
passion.
I apologize. We aren't
Okay,
seeing your other
okay.
with notes.
Thank you. There you go. That's better. It has been my passion to really help business owners understand capital, right? Money, and how it goes into their business to generate more money, right? So I've decided to really make that my focus, trying to train business owners and answer those questions. And so we'll take all that energy and experience into today's conversation. Now, if you've attended my trainings before, you know I like to be a little light when we're having these conversations. I like to make it funny, right? And so here's a little meme. I thought it was really cute, right? Money doesn't grow on trees. It comes out of my ears. It certainly feels that way as we have come out of 2020 and the pandemic with the government providing so much support to small businesses. But, you know, with so much money flush in the economy, right? With so much happening, where do we really focus that attention? So we're going to go ahead and talk about that today. All right, so I've divided the conversation into 5 key components. All right, 5 little areas. We're going to talk about the disaster loan spending guidelines. What does SBA say that you can do with your disaster aid support funding? All right, so we'll go through what SBA says, but we're going to expand beyond just the black and white. All right, we're going to talk about planning for the best use of those disaster funds. Yes, I did say the P word, planning, right? We want to make sure that we're taking advantage of these funds in the best possible way. But we also understand that disaster funding is wrapping up, right? I know disaster's not over. A lot of us are still experiencing it even with the onset of Omicron. But there's other sources of support. For instance, the infrastructure bill, right? Building America Back Better. All those acronyms. We're going to talk about that today too. I'm going to weave in how that support is set to offset for the disaster assistance and the difference in the conversation from the government. And we're going to talk about documenting disaster funds. All right, so we'll learn how to use them best, plan to use them, and then we're going to really talk about what is required of us as business owners that have received those funds. And then I'm going to end on the question, when should you pay off your disaster loan? Right, that's a really good question. And there's lots of layers to it. So you'll have to kind of hang in. I feel like it's a teaser. But when we get to the end, I really want to hear your feedback after I make the entire case. Okay? So remember, that'll be fun. All right, with that being said, let's dive into the first topic, which is disaster loan spending guidelines. All right, so SBA provided this money, right? They provided some guidance that has been updated recently. So I don't want to have people think that it's the same old status quo. There was a big change towards the end of last year that we came into the new year with. I want to make sure you understand it. So what they're basically saying, if you go to the website, is that you can use these funds for working capital, okay, aka money for the business, right? Working capital is just spending money, right? To payroll, right? That's kind of understood. Rent or mortgage payments, utilities, and then this other ordinary business expenses. And here's the change. They used to say that you could do debt that was pre-disaster, all right, nothing that was created after the disaster time frame. Now they're saying you can pay business debt that was incurred at any time, all right, the past, the present, or the future. All right, so that seems a little jarring. Again, doesn't give a whole lot of guidance. So that's what we're going to spend today really like fleshing out to understand. All right. Now, what's better than doing the work ourselves, right? That little image gives you a little panic attack. Don't worry, I'm not going to make you do algebra today, but I will go ahead and give you some examples of different types of businesses, right? And then kind of some options. Let's help them figure out the best or highest use of these funds based on their situation, okay? All right, so we're going to take example A, case study A, which is a consulting business. Now, in your mind, right, think consulting business is a service business. Right? There's no products or goods they're having to buy, no inventory. We're not sitting here worried about their shipping costs, right? It's a little different kind of business. Now, we got to think about the business and what their major expense items are. All right, so historically, what are their expenses? And so for a consulting business here, we're looking at payroll being a major expense. They utilize software, so a renewal fee or subscription would be important to them. They pay money for accounting services to keep everything up, right? Maybe for billing or invoicing. And this particular company is a home-based business, meaning that they have zero rent. All right, so remember what SBA said you could do, right? Now we're looking at a case study and we're really trying to understand the business from a more in-depth viewpoint. All right, so I'm going to throw a question to you. Which of the following expenses do you think can be paid with the disaster funds? Now I'm going to give you some options, all right? Number one, an owner vacation retreat. How do you feel about that? Just you don't have to state it out
Love
loud.
that. Are you kidding? Love that.
You love that? SBA wouldn't. SBA would be not so happy, right? Okay, second option, gifts to your clients and your staff. It's been a hard year, right? You want to let them know you appreciate that. Do you think SBA would be okay with that? Probably not, right? How about networking events? All right, so I put that in there because it's kind of tricky, right? Because some people might say, well, I don't have any business, so I should be going out there mingling and trying to make some business, right? Certainly, networking events, Rebecca, would be under other business expenses. Like, could I make that happen? All right, just hold on to that thought. I'm going to answer it in a moment. Merchant loans. Okay, those are those scary loans that come right out of your bank account. They kind of like sweep your account every day. Scary. All right. They took out that loan in 2021 and there's high payments and high interest. Do you think SBA would allow for you to get rid of that debt? Oh, I see head shaking. Yes. Okay. Yeah, probably, right? Be good for you to get rid of that debt. All right. How about personal home loan? Can you make payments on your personal home loan? It is a home-based business. That's tricky, right? All right, so just like a little side note, I don't want people to think I'm saying yes to that. I would say no, right? It's business debt. They said you could pay business debt, not personal debt. So nothing on the personal side. Okay, personal credit cards, big sad face there. How about down payment for commercial real estate purchase? Will they let you put money down for the real estate? So, little side note, no. Okay, that goes into growth. We'll talk more about growth, right? Purchasing equipment for the business. What if I need a new printer, right? Or a new car that has my business logo wrapped around it, right? Sounds really good. Do you think SBA would allow that for disaster funding? Probably not, right? It's a gray area there. Probably not. All right, and then investment in a new business, a new affiliate business that the government knew nothing about. You think that that's a good investment? You're all shaking your head no, Rebecca. Okay, good. All right, so we're starting to understand there's complexity to the conversation here, right? There's ways you can kind of cater, but ultimately, I really want you guys to understand what are examples of safe uses. Now, when I say safe, that means if you go into an audit situation and your records get pulled, right? Are you going to be safe from going to jail or having to pay a penalty because of how you use those funds? I want you guys thinking about audits. All right, so what's a safe use of disaster funds that can easily be documented? I'm going to give you an example. Remember when we talked about the major expenses for the business, how it was structured, and what we were looking at historically? Well, your answer is going to come into looking at the main operating expenses for the business. Nothing fancy, right? So payroll was one of those major expenses, using the disaster assistance to fund payroll. Very safe, easily documented use. Right, remember that software renewal that was critical for the business? That would be an ordinary business expense, easy to document, easy to claim that you need in order to survive. Right, and then how about accounts receivable billing or those accounting services? Right, you need to pay your accountant so that you can collect your money. That is a very understandable and needed service that the government wants you to do, right? That would be an ordinary business expense. And then payments on any business debt. Remember, it cannot be personal debt. Even if you're a home-based business, right? And your business is out of your home, you have to be really careful on where that money goes and if the person benefits. So in this case, right, I would advise you away from making the personal mortgage payment. Now, if you wanted to pay yourself payroll, right, so it goes from the business to the owner in a form of payroll or distribution, and then the owner goes ahead and makes the personal payment to the mortgage. That's a different way to look at the situation, but we don't want it directly going to personal debt or debt repayment for the person. Okay? All right. Good lessons, right? Hopefully a few good chuckles. All right, next is going to be case study B. Case study B is a custom bakery, right? Because who doesn't love custom bakeries? All right, and in this case, they have a product that they're selling or products that they're selling. So we've got major business expenses. They've got rent or lease, so they're a brick and mortar. Right? They've got payroll. All right, they have cost of goods sold. So the flour, the eggs, the milk, right? They've got baking materials that they have to purchase. Right, utilities in order to have the lights on and to actually, cook things in an oven. Pretty important to this one. Right, marketing, right? They historically have spent money on marketing. So going forward, that would be an ordinary business expense to keep things status quo. All right, packaging labels, right? If they can't put that box around that cake, it's pretty much not going out that door, right? So that's a critical component to their operations. Vehicle expenses for delivery, right? That's normal. And then business insurance. All right, so if we were looking at their historical financials, let's say a profit and loss statement, aka income statement, and we were trying to see what they had to pay to keep that business operating, this is what would rise to the top. All right, so question, which of the following expenses can be paid with the disaster funds? I'm going to throw a bunch of random stuff at you, okay? I want you to kind of test your knowledge here. Rent or lease deposits. But here's the catch here. For a lease expansion. All right, they want to add another 1,000 square feet to their current rental space. And this is to allow for additional customer seating. How do you feel about that? So they're not talking about the rent and lease that they already have. They're talking about growing. Okay, so that's like a catch-22 situation. We'll go into more depth, but you have to be really clear about spending money on keeping things status quo, right? Surviving, or making investments in growth. You don't use disaster funds for growth. You don't. You use it to survive. Okay, next, they're looking at new furniture, fixtures, and equipment. So the question is that new furniture, fixture, and equipment for the existing business? Because maybe it got broken or it's destroyed. Maybe if it was a fire or some other type of disaster, that would be different, right? But if it's for the new expansion, right, for the growth opportunity, I would probably say no, that's not a good investment, right? Because it's growth, not survival. Okay. All right. Let's say they're trying to replace a faulty freezer that got broken and it's not holding the proper temperature. And if you know anything about custom bakeries, right, if they can't keep their products fresh, bad things can happen, right? That could be critical component to operating. So I would say yes, that's on the disaster, the needs side. If they don't have a freezer, they can't operate in full function. Right? How about expanding their outside waiting and seating space? That is a really good conversation because where you're thinking about growth and opportunity expansion, there's one little caveat here. If they could connect the story to needing to spend those funds for the outside waiting and seating space to being directly impacted by the pandemic and having to follow guidance from either the city, the county, right, that they needed outdoor space in order to facilitate their services, they could connect use of these funds to filling out that expansion. But it's outdoor seating is the conversation. Interesting, right? I know. Right, how about hiring new talent? New talent to go along with the growth opportunity, right? So they're trying to expand. Maybe they're going to have some pastry chef over there making, training sessions, right? And they're trying to get or attract the talent. Can they use this money for payroll to hire that new talent? Remember, you got to connect it to the story. So if it's part of the growth opportunity, it's not because they lost an existing talent and they're down a man and they're trying to survive, right? Probably not a good idea. Right? And then finally, marketing to the community for their new party room, right? The growth opportunity. Do you think the marketing expenses for the growth opportunity is a good use of disaster assistance? See, this is not so easy, right? Probably not. Like, that's a conversation, and they have to be prepared to defend it if it ever got audited. All right, so going back, right, we want to look for examples of safe uses of disaster funds, something that can easily be documented for these businesses. So I've got a few examples of some safe things. All right, so rent and lease payments, right, but I want you to understand there's a difference between the historical lease payment and taking on an increased rent expense for the growth opportunity, right? In my mind, the way I would recommend doing this is to make sure that there is that difference. You've distinguished the difference and keeping the historical safe and sound, right? Surviving, that's allowable. But making a first and last month for an expansion or increasing those rent expenses because of growth, I would probably be very careful about how you documented that, right? And then payroll. Payroll will be a very safe conversation, right? That was one of their major expenses before, and they want to keep their people paid. Baking supplies. Okay, now we have cost of goods sold. They have nothing to sell if they don't have products, right? And probably the cost of that food or their supplies has gone up due to, I don't know, the economy, inflation, right? The supply chain interruptions. That would be an easy one to document. Right, any type of increase in shipping or delivering fees, so maybe now they're having to pay more for delivery, right? That would be something that would be allowable to use your funds. It's connected to the disaster. Utilities, right? That's survival. And then marketing, any of the ordinary business expenses. All right, and then just make sure that you've connected the use of the funds to survival, right? Not necessarily growth, as long as you can show that you kept things operating. That's what you want to, you know, lean into and document. Ooh, right? That's not what you probably expected. So let's talk about planning for best use of disaster funds. Hopefully you found that little exercise, helpful. But as you're going forward, remember, you've got some money. Hopefully it's still sitting there. It's not all gone, right? And you're trying to figure out, how do you protect and use this? All right. Remember, with anything, we are telling the story of your business as it has gone through the disaster phase, right? So what is your disaster narrative? Right? Why did your business need, not want, but need to take the disaster funds? There's a strict requirement for taking this money. You are making a self-certified statement that the business would have failed if you didn't take the disaster funds. So what was the need? Right? And I'm just giving you three basic needs. All right. So hopefully you can find some alignment with at least one of these three. One, there was loss of revenue. Okay, so maybe your clients left or bailed, right? Revenue wasn't coming in and you still had operating or business expenses in order to keep operating. That would be a disaster need, right? Loss of revenue. The next would be just increased operating expenses. So let's say the bakery, the flour went up, the eggs went up, the milk went up in costs. And so based on what you had agreed to sell those products for, now your profitability is hurting, right? If you have a situation like that, your disaster fund is there so that you can make sure that the business pays those ordinary expenses and can continue operating without failing. All right, so increased operating expenses. And then loss of market, clients, or project. So let's say, I don't know, you marketed your services to an industry that just plummeted during the pandemic, right? Good luck. Like you weren't going to find any money in this. And you had to retool and try to go after a different type of market that was getting support, right? And was able to pay you for your services. But it took some time to turn that around, right? So if you had to spend money to get retrained, or you had to, go out there and market to a different target industry, right? And then prove yourself, that conversation and that use of funds, right, would be allowable because of your need, what you experience. So I want people to remember that your use of disaster funds has to match your need. So what happened, right? And then how did you use the funds to overcome that limitation and survive? Pretty simple if you break it down. All right, but I did want to make sure everybody understood what I meant by survival, right? Versus growth. We talked about that a little bit in our little examples, right? Growth is different from survival. So remember, if we're talking growth, it's spending money connected not to the survival of the business, but actually expanding beyond survival. So in most cases, business owners are always trying to grow, right? It is like somebody tattooed it on you from birth, right? You're always trying to grow. So it gets to be a little convoluted when we stop and we try to really analyze it. All right, just remember, anytime you're using those funds for expansion, growth, conquering new clients, and it's not a matter of survival, right? We could label that growth clearly. All right, now survival, it's critical to operating. Like if you didn't pay that rent, you're not going to be able to have access to that space. Your landlord will lock you out, right? Making sure that rent payment is there so you still have access to your tools and be able to operate your business. That's survival, right? Not a story we all want to talk about, but that's survival. All right. If that business is at risk for default against loan obligations, not making the payroll in order to, or anything around that payroll, really, anything connected to the survival or going out of business, that would be survival. All right. And remember, the funds from the government are being used to protect the business It's replacing lost income or historical revenue so it can continue operating and have that shot at being able to recover. All right? That's the difference. That's what I mean. Now let's go ahead and I like to play a game. We're going to play a game called the what if game, okay? Now, in this, I'm going to give you an idea of a business that received disaster assistance, and you're going to follow along with their story. Okay, because remember, we all have a story to tell. You're going to have to figure out what your story is, but we're going to walk through a case scenario of another business owner. Okay, and just so you know, I see this more often than not, and that's why I want to talk about it. All right, because I see it from a different point of view. I'm going to try to get you guys to see it from a different point of view too. All right, so this is our business. All right, they're a disaster recipient. They receive funds. All right, their story is that they lost clients at the start of the pandemic, starting in April of 2020. Their existing client contracts, so they had contracts, they were placed on hold, which ended up seizing any incoming revenue. All right, scary place to be. Right, so clients, so their customers, slowly were paying their invoices. All right, so they had billed for services provided. They weren't getting paid very quickly. In fact, the age of those accounts receivables was getting beyond 90 days. Now, that's a scary period for business owners, right? Not getting paid within 3 months of providing the services. Because if you have any lending relationships, right, that 90-day mark ends up being the cutoff. They count anything beyond 90 days as not being collectible, right? So they essentially remove it from your profitability and could seize up any lines of credit. It's some scary stuff there. So here's the story. In 2021, the business switched their target market. All right, so their market was just down, right? They had to do something. So they switched the target market and they saw new clients and they were able to finagle a slightly higher profit margin, right? Things are looking up in 2021. Right? Make it even better. They had a large contract that they got and they completed in 2021, which increased the gross revenue and their net income beyond what they made pre-pandemic. All right. So what they made in 2019 and 2021, they surpassed it. All right. Good news. Then at the start of 2022, this year, the company's back on track and they're doing better than they were before the pandemic. So we're going to take all that in, right? That's their disaster story. It's a good story, right? Things are turning around. Like the government support really helped them when they needed it. You know, they should hopefully survive. Now I'm going to break this down into the money focus, all right? Because that's what we're dealing with, right? We're dealing with government money. We need to understand the numbers. All right, I'm not going to make this painful for you. I'll make this pretty easy. So in 2020, all right, the company received that SBA idle loan support, which was 6 months of working capital, which they got capped at 150,000. So they got 150,000. All right. Now the funds lasted the company exactly 6 months, and they were exhausted by September of 2020. So they got this little tiny window of support. All right, so management requested and received an idle loan increase, and they got the maximum at the time, which was 500,000 or half a million. Now note, when they got the half a million, they had to subtract out what they already received, the 150. So it really only translated to $350,000 in additional working capital or additional funds to support them. Right, but they had run out of the money before. So deep breath, right? They had a little bit more runway to continue operating. All right, and then by 2022, right, end of year, we're going into the future, the company reported record sales with more than their net taxable income than their historical years. Okay, so all's good. Now let's take a look at the numbers. Now this is just strictly black and white, there's no gray. Okay, so in 2019, we've got gross operating revenue. So the most that they made in 2019 was $329,088. All right, their total expenses, 318,610. All right, net income, right, the difference, 10,000. It was a positive 10,478. All good, right? Now, because this was pre-pandemic, they didn't have any idle disaster funds. All right, so they had $0 from the idle fund. And if we looked at their regular bank account, they had around $8,400 sitting there in the bank account. That was pre-disaster. All right. So 2020, all right, the year of the pandemic, their gross operating revenue was $57,240. Is that a difference from 2019? Right? They could definitely show that they needed the money. They needed that support. They were right when they went to the government for support. Now their total expenses, all right, they didn't have as much revenue and they reduced their expenses, but they still ended the year with a negative $111,737. Is that scary? All right, so from this moment in time, at the end of 2020, if we looked at their disaster loan fund balance, the money they received from the government, right, what was left over that they had not used, it would have been 335,000, right? And if we looked at their regular bank account, they were around 8,263. Are they okay? Okay. Looks scary, right? Because you see the red. But at the end of the day, they got money, right? They got money. It's still sitting there. They're still able to operate. All right, let's move forward. So 2021, check it out, right? There were 50 something thousand in 2020, and in 2019 there were 329,000. They're at 502,000 in gross revenue. They really did pretty good, right? Their expenses are there, but their net income in 2021 is $100,496. In 2019 it was just 10,000, remember? They're doing much better in 2021. And if we looked at how much they had in their idle disaster fund account, remember that separate account that they're not spending from because they're being very careful of use of funds? See my head shaking up and down? Be careful, right? They still have $295,000 sitting in that account available for them to use for essential needs. And if we looked at their regular bank account, remember they had 8,200 before. Now they have $45,496. Are they doing okay? Big resounding yes, right? Like woohoo, happy for them. All right, so here we go. 2022 end of year. Look at that. Their gross operating revenue went up to 889,000. This is an amazing story. All right, total expenses, you know, they increased, but that's just normal when you make more money. Their net income, $222,000, right? That's amazing. And then if we looked at how much money was still left over from their disaster funds, they didn't go through much. They still got $254,000 sitting in that account that they can use for essentials. All right, and if we looked at their regular bank account, they've got like $147,189. How do you feel at the end of 2022? Feeling good? Optimistic? What do you think the business owner's feeling? Like sky's the limit? They want to grow? Haha! That's what I wanted you to start thinking. They're thinking about growth, right? They are. And do they have the ability to think about growth? That is a good conversation, right? Okay, now we're back to the gray. Okay, let's talk about the gray. All right, so we talked about planning their use of funds, right? Like this is a business that is positioned to start planning. All right, so the company has 254,000 of disaster funds remaining. And remember, this in a separate account so they don't overspend, right? They're documenting everything that I recommend. All right, but I want to just put this to you, right? Knowing their normal operating expenses, we went through that through the case study A and B, right? Highest use of funds. They really only have about $40,000 of allowable uh, ordinary operating expenses that they can actually use the disaster funds for. All right, and that's covering rent and utilities. Those are the safe uses of funds that they can document. All right, so that's $40,000 a year. They've got $254,000. They're going to be holding on to this money, right? Just barely using it. because that's what's required for over 6 years. Okay, that is a long time to go through those funds. All right, but I want to also put this to you. The company has been able to generate, because they're doing well, money that's not connected to the disaster funds, right? That's $147,189 in non-disaster funds that's sitting in their normal operating business account. Remember, those funds are not restricted. They can use those for growth. Okay, do you start to see it all play out here? Cannot use disaster funds for growth, can use money that's been created through normal operations, not encumbered. We can use that for growth. Well, I'm going to pitch another question to you here. What do you think, if you were that business owner, what do you think is the best strategy for the use of those disaster funds? Okay, we're thinking about it. What are some ideas? I'm going to give you some ideas here on myself. You could keep the disaster funds, right? Why not? It's cheap money. It's 3.75% interest rate over 30 years, right? Go try to find that in the current market. You're never going to find it. You can hold on to that money and you can use those funds over that 6 years and just keep documenting use of funds in case you ever get audited, right? You could do that, right? Next, another idea is you can take those non-disaster funds. Remember all that money sitting in the bank account, that 145,000, right? You could take that money and you could help grow the business, right? There's no problems there because it's not disaster funds. You can use your own money for growth, right? Okay, that's another idea. Or the third option, you could always make larger payments and pay that disaster loan off early, right? Less interest, right? You get your assets back because any dollar amount over $25,000 in government debt, the government has a lien against your asset, right? There's all kinds of wins if you decide to pay that off earlier, right? So let's think about that, right? We got some options. We're going to take a little side detour. We're going to come back to this conversation in a minute, but I want to take a side detour and let's start exploring other forms of support that the government's giving us, right? Because right where we're at right now, making these decisions, the world is changing around us. And the government is rapidly trying to create more financial support for businesses, but they're doing it in a different way. They're not giving you disaster funds, right? Because the whole goal is that we're beyond the disaster and there's additional assistance and support in a different way that does allow for businesses to grow immediately, right? There's no restriction on how they use those funds, right? And so I know you've seen it because how could you not live in today's world and not see this information, right? It's everywhere you turn in the news. They have the infrastructure bill and we've got the Build America Back bill that's being proposed. It's not finalized just yet, right? So what's all that about, right? We'll just kind of give you a little detour of what's happening. We know that right now there's been a 1.2 trillion, and I said trillion with a T, heavy infrastructure bill. It's already passed, and you can see all the dollar amounts there. I'm not going to read them to you, right? And the uses of funds. The government is putting together public works and they are opening up support primarily for small businesses. To be specific, a lot primarily for small minority or woman-owned or veteran-owned businesses, which will have what we call a priority or a set-aside for these projects coming from the government. All right. And it's essentially money for giving them jobs that will help them grow, help them hire, right? And even if this is largely for infrastructure, I want you to understand all these businesses are going to be looking to the rest of the industries for support to accomplish these projects. It will filter through from these individual projects, right? Heavy infrastructure into the entire economy. All right. So huge money going into the economy. This money There's no restrictions on it. You can use it for growth, and that's what they want. All right, so different focus happening here. Now, here you go. I talked about it, right? This is what's proposed. It has not officially passed. They're still trying to figure things out. But it was 1.85 trillion, the Build Back Better bill proposed, and they're expanding the support into additional areas: clean energy, child care, home health care, rebuilding homes, affordable homes, right? Health insurance, all kinds of things, all the way down to education and Medicare. All right, so again, additional money totaling, right? If all of that passes, it's going to be totaling over $3 trillion. And it's going to be dedicated to really helping those small business owners, right? And there's going to be bidding opportunities, there's going to be subcontracting opportunities. Companies are going to be looking to get those RFPs, get those contracts, right? And really, if that gets you excited and you're like, I need that type of growth capital, just understand that you can reach out to your SBDC advisors. They're here, right? And you can learn more about government procurement. Right? They have a whole arm to support you there, and they can get you ready, get you kind of in the know on how to go after those opportunities. But I really want you guys to understand large amounts of money are coming into the American economy, which is creating a different level of support and opportunity. One where we can fully turn away from the disaster and start focusing on the future. And so you don't necessarily need to be looking at disaster money for that growth opportunity. There's other money that's coming out there. We just need to tool up our businesses to grab it. All right. So we're going to broaden our scopes here. We know more money's coming out. We're going to start looking for training and support on government procurement, right? And it doesn't even mean that we have to be the prime. That means the main award of the contract. We can start networking with other business owners, looking for opportunities to support larger projects as a subcontractor. All right, sky's the limit out there. Was that a good detour? I think it was a good detour because you know what I'm going to hit you up with next? Documents. Documenting use of funds. Look at that stack of documents. Doesn't that make you excited? I know, right? You probably took a nice deep breath. That's good. All right, because let's dive in. All right. When you're using the government disaster funds, remember, we're always connecting to the disaster story, right? You have to understand what that narrative is for you. And then you have to be able to support that you did use the money correctly, right? It connects to the disaster use. Well, all those files are right because you have to keep those disaster funds in a separate account, similar to what we saw in our little case study, right? They knew how much money was noted for disaster. We have to track those expenses. We have to be meticulous about this, and I know you don't want to hear that, but you need to log your expenses, and they need to be logged into those approved categories, for instance, like the rent or the payroll, right? And you're always going to use that two-pronged documentation system. All right, so if you forgot about that, or you didn't have the pleasure of seeing me talk about the two-pronged system in the past, I'm going to explain it to you here. All right. The government and the IRS, they don't like to just see one version of the information that you're telling them. They like to see two, right? Because if they can see it two different ways and that balances together, they have certainty that the information you're providing them is true and factual. All right. I'm going to give you an example. Let's say I wrote down that I made payments for payroll, right? That was an eligible use of funds. Okay, so I should be able to show a bank statement showing money coming out of my business account for payroll, right? And for that additional prong, right? That two prong, bank statements one, second prong, maybe I've got a payroll, what would you say, statement for that pay period, right? And it connects and it balances to the amount that was taken from my account. Remember, it's got a balance. Or let's say I took that payroll information and I also added a 941, an employer federal employee wage verification. It was a report to the government. And if you looked at those amounts over that quarter, it closely balances to that 941 IRS document, right? That would be also a two-prong report. So you can see what I did with the money, that I actually paid it, right? And then it was an allowable use. That's the two-prong system. So whatever you're doing, how you're connecting to the documentation, it's got to be in the two-prong system. And this is what I want people to understand. When you take disaster funds, right, there is an audit protocol, right? I'm not telling you that they're going to audit you, but they could, all right? And what they're looking for is for you to hold on to those records up to 4 years following the final use of funds. That is a long time. So remember that example where they use those funds over 6 years? Okay, so they would have to keep 100% of their use of funds, right, for 10 years, right? It's the 6 years that they used it, and then 4 years beyond that, right? That is a lot of paperwork, right? The stacks were right. There's a lot of paperwork involved, and that is a lot of work for the business owner or accountant, right? Or the team that's having to keep up with that. So you have to ask yourself, is that what you really want to do? Is that the highest use of your time, right? It's up to you. But I'm going to throw another question at you. When, when should you pay off your disaster funds or your disaster loan, right? That's a good question. I'm sure many of you are trying to figure that out. When is that? I'm going to just give you a few factors to consider. Okay. Number one, right? If you look at the SBA idle loan agreement that you signed, all right, there's a highlighted area here. It talks about limiting distributions of assets. Okay. Now, I'm just going to paraphrase. You can read the fine print yourself, but basically, as a business owner, you can't take any distributions or make distributions that give preferential treatment to yourself or any shareholder, owner, other party, right, outside of the government. All right, so you got it. You cannot directly or indirectly make advance payments on loans, gifts, bonuses, or anything to any owner, partner, or its employees, right? Or even other businesses that have controlling interest or affiliates. All right, you have to make the government a priority for payment. So remember that company that we were just looking at, our what if company? So that business is doing really good, right? Do you think that business owner can pay themselves a nice little bonus that year? Not if they keep the disaster loan. All right, if they keep the disaster loan, they're still stuck paying themselves a similar wage to the pre-disaster. They can't ever benefit from that. Otherwise, they're in direct violation with the agreement they signed with the government. Interesting, right? All right, another one. Here's another factor to consider. All right, personal guarantees. All right, this gets a little loosey-goosey, so I'm going to try to make this simple. But any dollar amounts that were $200,000 or higher, there was a separate agreement that you signed, which would have been a personal guarantee. All right, so what that personal guarantee says to the government is if anything happens to that business, meaning that it doesn't succeed, it dies, right? We call that failure, right? You will step up to the plate and repay the government every penny that it gave you. All right, that's the personal guarantee. Well, what a lot of people don't realize is even if that dollar amount is under that $200,000 figure, each individual entity that acknowledges and accepts personal obligation and full liability under that note as borrower, there are still wordings within that agreement that you signed that says that you are liable under that loan agreement. It's not a clear getaway. All right. So you got to think about that as you start going forward, right? Do you want that personal guarantee for that government debt there, right? So think about that. I just want people to understand. All right, and there's more, right? Because, I'm full of good news. I'm full of it. All right, here we go. Collateral assignments. I mentioned this early on in the conversation that any amount that's over $25,000 in idle disaster funds, the government or SBA became a secured party and they filed what we would call a lien. All right, that's interest against all business assets. Now, notice how many words are on this slide, right? It makes you dizzy, right? If you can imagine an asset in any form, past, present, or future, the government has a lien against it, all right? They have made a lot of leeway to make sure that they own all the assets of that business if that dollar amount is over 25,000. And so what happens on the back end is that means that going forward for any growth loans, like let's say you're our what if business and you'd like different type of capital to grow, you don't want to use your own money, it could potentially block any other future lenders from being able to support you because the government has really everything, right? There's no collateral there that they could use in order to reduce their risk. So that stops a lot of people from being able to get growth capital and it becomes a hindrance. Now, will it become a hindrance for your business? I can't tell you for sure. I can tell you that it's normal for lenders or investors to want to see these loans paid off and the collateral freed up before they continue any growth capital loans. All right? Interesting, right? All very, very interesting. Well, hopefully you guys have done a good job putting questions into the chat box, right? Because we're going to take a lot of time to try to answer those in great detail. But I just wanted to go over the highlights here, right? Remember, SBA idle funds must be spent on the essential expenses to maintain historical operations, right? Hopefully I made that painfully obvious when we're talking about examples and what could happen and what couldn't happen. That's what these funds are meant or designed to do. All right, anything outside of that, right, would be considered misuse. You don't want to be in that conversation in the event of an audit. All right, SBA idle funds are not to be spent on growth related opportunities. So we had that little conversation about that bakery and them wanting to expand into another 1,000 square feet and host parties, right? Sounds like a great idea. But if it's connected to growth, we've got to be careful, right? We can't use government money for growth. It's not allowable. This is survival money. All right, and then shareholders cannot take distributions, bonuses, or give themselves preferential treatment while they've got those SBA idle loans outstanding. All right, now that gets really tricky because I can tell you right now, I have not seen a single business owner adhere to that. I know, right? I've seen people start to pay themselves more. I'm not debating whether or not you deserve a increase or bonus. I know you guys work really hard, but the language is there, right? You got to be really careful what happens. And if you start to pay yourself more, you've got to be able to justify it that you didn't take the money from the idle funds, that you didn't misuse it. So be careful, right? And remember those business liens. I look at business liens all day, every day, right? It's a big conversation and it's a part of a business being able to grow and have the assets. If your assets are locked up, I'm just telling you from an investor standpoint, it looks like you have a job. It looks like your job is to pay off that loan and get out of that tight spot so that you do have the ability to have freedom to make decisions, okay? So remember that lien conversation is a big one. And then obviously misusing SBA idle funds, not being able to keep up with the proper documentation, right? Remember the two-pronged system. That could potentially lead to fines, penalties, imprisonment, nothing good. And what I'm seeing from the news now, because I do focus on these things, there's a lot of people that are being found out and the government's making examples of them for misuse. Just the other day, last week, There was a business owner who had taken disaster funding from the Main Street Lending Program, little known program, right, from the pandemic, from the CARES Act, and they had improved their home and they had bought a fancy new car, right? And sure enough, that fancy new car and that home improvement landed them in jail, right? So just be careful that you are documenting things properly and you are making sure that you're adhering to the guidelines. Good conversation today. Now, just a quick note. My name is Rebecca Schultz. I am the founder and executive loan consultant for Centerlog. If you have questions, right, that go beyond our little slideshow today, feel free to send me an email or just, reach out to your advisors because they can certainly know where to find me. And with that being said, I want to go ahead and see what kind of questions came out through the chat box.
Well, there has been a couple, and thank you, Rebecca, for again explaining things so perfectly. If I got everything right, basically, use your moral compass to make sure you don't use funds inappropriately so you don't go to jail. And document everything twice because that's just the procedure you should do to cover not just your tail, but to prove to the government that you used those funds appropriately as for the disaster it was intended and not for that house or car. Did I get it right?
That's right. That's right.
Okay,
Yeah.
great. I hope to be able to give that to our clients as well. We do have some questions. I know Roger does because Roger is really into this with you as well, and he loves to make he loves those same conversations. And I have one question in the chat box I'll get to first. What groups are the set-asides available for? Minority, women, and veterans, or what is it?
Correct, correct. Those are the three big ones.
Okay.
That conversation I feel like keeps evolving. I'll be honest. Um, so new terms have been created, being able to differentiate between minorities and lack of equal opportunity, right? I would just say where I would focus my energy if you want to make sure that you gain all the possible opportunities available in that growth capital, the infrastructure bills that are coming is to check in with the SBDCs, right? Look for minority certifications, women-owned business certifications, and then in veteran certifications. Just look for the certifications if you haven't gone on that journey before. All that support is there within the community, right? There's training on it constantly. Just jump in, start getting your certifications. I would say that you want to make sure that you go into sam.gov, and that's something that you can get through the procurement training, right? sam.gov, and you've done your registration there. And then if you've gotten any of those minority, women, or veteran owned, that you update that information with those certifications so you can be prime to receive and bid on the opportunities.
Great advice. Thank you. And anybody else have any questions? Roger?
Well, number one, I sorry.
It has
Uh,
5 parts.
Number one, for sure, this segment should be mandatory for anybody that has an idle loan. I'm telling you, um, and I don't know how many people are on this call, how many of our clients, but we absolutely have to get the word out on this one and should have this one as part of the mandatory because there were things in there that you covered that, even I was learning. So there was some great information in this one. So, anyway, hopefully we can continue this one or have you back to just blast it out and let everybody know it's mandatory. The other one was because we have been out there um, talking a lot about that staying under the 200,000 for avoiding the personal guarantee. So I was unaware that there was sneaky language, in there that, could capture some of that. Um, is that in all the contracts? Was that an update that they did at some point? Do you know any of that?
Yeah, so that they used a standard contract for all SBA idle loans, and the guidance that came out of the CARES Act, which limited that personal guarantee, was different than what was historically done. And so they didn't update the historical contract. So everybody just signed off on it. And so the conversation that, and I picked this up from attorneys that are guiding, right? So I'm not an attorney. Make sure I disclose I'm not an attorney, right? But the conversation is that the individual business owners, should they get caught in that issue, right, they have to go and prove the difference between the CARES Act and what they signed. And the attorney's guidance is, you sign the document that said that you acknowledge that. That is, um, from a contract law standpoint, all binding, right?
Yeah.
Going back and having to do that, well, you could, but that's not as clear and clean as having that be different. So I have
Yeah.
to agree with my experience with SBA. It's whatever's in the contract.
I feel like that one could become a big one because, as I'm sure you have, I've talked to clients that have already burned through that and still aren't healthy. And, the potential of owing that at some point could be huge.
Agreed. Agreed.
Yeah. Um, the other thing you talked about going out and getting additional future capital from lenders, I was under the assumption that the SBA was continuing the subordination of their debt and allowing future encumbrances to take first position on that. Is that changed?
Well, you can request it, right? But what I'm seeing from my end is a lot of lenders will just sidestep. So getting to that conversation and having them say, I'll go through the process. And if you've never been through that process, I'll give you a little slideshow of what it's like, right? You have to get pretty much approved through that lender, and then you have to go off to SBA and their servicing arm, make the request, and wait and wait and wait and wait, and then have them come back and agree. And then once you've gotten that, you can continue the conversation. But the time frame that's around that, I'm not going to tell you how long that takes because I'm sure it changes based on the demand, but it is excessive. And with the approval conversation being so slim, usually you have to get that approval done within 60 days. Otherwise, everything is too old and then you have to restart the process all over again. It creates a little bit of a nightmare to go
Sure.
through it. And a lot of lenders that I'm talking to in current conversations, they're just advising the clients to go ahead and pay them off. They don't want to deal with it.
That was going to be my next question. Have you started to see lenders accepting that as, something they can roll into their loan, pay it off and absorb?
Yeah, I'm actually in a conversation. It's really interesting. I'm in a conversation right now with a borrower that took the full 2 million.
Wow.
And you know what? You don't see a lot of those people. Took the full 2 million, and they have a building, a brand new building. They created or constructed it themselves. All right. And it's free and clear of any land or any liens, sorry. And they're looking at trying to get the $2 million refinanced and paid off and put the building up as collateral. Like that's going to be a good conversation, right? But they'll pay more for the SBA growth capital so that the business owners can open up and start paying themselves, right? They're just basically changing the conversation from disaster into growth, which
Yeah.
I think is a really interesting point that a lot of business owners may not be, they might think that's not worthy. It's a really interesting conversation.
Yeah. My very last comment that I was going to make was circling back to my very first one to make this mandatory because I there are numerous businesses out there that did do better in the post pandemic, right? Or at least as good, and feel like they can pay themselves more. They can go and repurchase another vehicle for their business, um, and not know that that could be violating some stuff. It really, we should. I don't know how to get it to be mandatory, but I wish it could be.
I agree. You
Thank
know,
you, Rebecca.
oh, we do our best, right? We do our best.
And one of the things we can do, Roger, as after this is done, we can definitely send the link out to those particulars that you know need it for sure. So once we do that, we'll put it on the YouTube channel. And for those of you who are watching this on the YouTube channel later, you know why we decided to send it to you. So I'm just kidding, but I'm not. We want to make sure that everybody is safe and spending the money appropriately and not doing anything but growing and thriving and surviving. Right, Rebecca?
That's correct.
Okay. Any
Correct.
other questions out there that haven't been answered yet?
I have a question. I'm going to piggyback on what Roger was just saying.
Okay.
Okay, somebody gets the funds and they are in a position where maybe with their bank account that has non-idle funds in it, can they actually buy the new vehicle because the business needs it?
Okay,
Bonus
so
or anything?
that's a fabulous conversation, Paula. So as long as they're using their own operating capital, right? It's not coming from the disaster funds. That's so important in this conversation. You have those idle funds all by themselves. You don't let any withdrawals touch that you can't document and show direct, need and essential expense, right? They could take some of that extra money from their operating account and they can go and buy that equipment that they need for growth. That can be used for growth, but they want to clearly define what is disaster assistance and what is growth capital for themselves. Yes, go ahead, Roger.
Sorry, one more question, because now I'm going to piggyback up what Paula just said. If the company has exhausted the idle funds, okay, they have receipts or whatever that they've spent these funds on, and it's gone all the way down to zero. However, that capital account now is back up to $100,000. Is that $100,000 available to them to use for whatever use, as long as they can still document that, hey, here's the $150,000 expenses that I use for the item?
Yeah, you got it, Roger. You have a clear understanding of it. So they just want to make sure they've documented whatever loan amount, right? They've gotten through all of that money. It is for survival, right? Nothing, frilly, right? And that is good. And then they just hold on from the time that they spent it. They hold on to those records for an additional 4 years, covering 4 years plus the use of funds, right? At that point, after that 4 years, they can go ahead and, they don't have to hold on to it. But they could be audited up to that point in time.
Okay.
And then, but the one little caveat to that, the lien still sticks until the loan's paid off, right? As well as the requirement that the owner or any affiliate, partner, right, they can't overly benefit from the business until the government gets paid back. So they can use those funds for growth opportunities at that point after they've paid off and satisfied the disaster funds, right? So they can use the remaining operating for growth, but they still can't pay themselves more, right? And growth capital still becomes a conversation, if they've got that lien from the government out there until they pay the loan back. So I think that's where we also see some danger. People are like, hey, I'm beyond it. I'm doing great. They don't realize that the government does expect to be paid back. They want to be a priority.
Well, then I would suspect the retained earnings in businesses are going to skyrocket for the next few years.
True
Probably so.
story.
Well, again, thank you so much. And we do want to respect your time. We know it's very valuable as it was today. And what better way to kick off February 1st and the whole month of February than this particular information? Because you know it's coming at you. It's going to be a lot coming to all the people that we do give business advice to. And I would love to ask you if you have any closing comments. We'll take them now. And if not, I'll share some things that are coming up.
Oh, I want to learn what's coming up.
All right, will do. Let me just let everybody know real quick. Here's a list of just the first part of February. On the 3rd, we have Marketing Your Business from the Driver's Seat with Melissa Forciat. We also have Team Decisions, How to Get Them Right. And that's coming up with Lorna Kibbe. And of course, we are in the middle of / just starting to really roll into tax season. And for those of you who really need to understand your taxes better, we have Intro to Tax Filing for Small Businesses. And that, guess who's going to do it? That's right, Rebecca Schultz. And that means we're going to all get a breakdown of how to do it a little bit easier. Don't miss that one. It's going to be very important. And as well, on the 7th, we're having Business Owner Tax Responsibilities with Angela Randolph. And Make It a Great Day with Anna Hay. She's coming up on the 8th. February the 10th is North Central Texas SBDC orientation with Rebecca Schultz coming back. So this is just the first part of the month. So much more. You can see up in the top hand corner, right about here on your screen, you'll see QR code. That'll take you straight to our link for you to be able to sign up for this and many other classes that are up and coming. So with that said, I do want to take a moment to say there's a survey coming at you right after this that will please take 2 minutes to sign up and tell us how we're doing with this training and where we can go with the training to make your businesses a little better informed in the future. So as for that, we also have the SBDC website with getting information about businesses, or if you want to schedule an advisor one-on-one meeting, confidential with you, please go right there, and there's a one-click process to fill out some information. We'll get you introduced to an advisor. And with that as well, I want to just say Small Business Administration, we want to say thank you to the state of Texas, North Texas SBDC Regional Office, and North Central Texas College. These are all our sponsors that make this happen at no cost to you, and we're so happy to have them. We thank you to join us today. Thank you for joining us today, and we look forward to seeing you next time. Have a wonderful week, and if you're living in Texas, stay warm. It's going to get cold. Goodbye, everybody.
Thank you. Bye.